Okay, welcome everyone. This is Tansen Fairmont. I'm the founder of Brilliance in Commerce, and I'd like to welcome you to a very wonderful June 20th, 2018, almost summer solstice time in the Northern Hemisphere and winter solstice for those of you in the Southern Hemisphere. Welcome to our House of Freedom Trust webinar number 7. And we have our guest, Randall Hillner, today, who will be illuminating many of the areas we've not previously discussed in the details of how to proceed with understanding these state-of-the-art trusts. Brilliance in Commerce is a project of La Vérité, which means the truth in French. House of Freedom International Natural Law Trusts is our trust department. Liberty Debt Elimination System is America's #1 unsecured debt elimination program. Then we have wealth building systems, credit repair, gold purchasing concierge, offshore asset protection, Monaco management group, wealth management, cryptocurrencies, and so on. This being Wednesday, June 20th, 2018, we're going to take the month of July off for many people taking vacations and reconvene on the 1st of August, the first Wednesday, the first day of August, with our next webinar after today's, again at 4 p.m. Pacific and 7 p.m. Eastern on the East Coast of the United States. September, yet to be determined. For future web attendance, we would like to invite you, if you have not already, to subscribe to the Brilliance in Commerce newsletter published by La Vérité. And that is available at houseoffreedomtrust.com with dashes between each of the words. So house-of-freedom-trust.com. Click on More, and then Newsletter Sign Up. For those of you tuning in by telephone, and if you don't already have it on the website, the call-in number for general correspondence, general conversation, voicemails, general questions, 360-200-7521. The preferred way to get questions answered usually is to click on Contact Us, submit a help desk ticket to our system, and then our customer service relations people will be happy to get back to you within usually 1 business day with an answer to your questions. But for those who cannot easily use the keyboard to get to it, a telephone call is workable as well, 360-200-7521. So I've been blessed to be Board of Advisors, Monaco Management Group, and also having been a speaker on radio shows, former offshore investment seminars, author of Sovereignty Consciousness, Cosmic Renaissance, the Trust ebook, the Liberty Debt Elimination ebook, and various other things. Randall Hillner, our guest speaker today, is Director of the Trust Department of Brilliance in Commerce, founder of House of Freedom Trust, White Light Unlimited, trustee of One People's Public Trust, creator of International Natural Law Trusts. You will be enjoying Randall's presentation today and be able to ask him questions. We'll open it up after, maybe half an hour, we'll see, after Randall has given some of his knowledge. We'll open it up to questions, and then you can raise your hand on the telephone, I think it's *9. On the computer, you click on the raise hand icon or type into the chat. Here's just an example of the summary for those of you looking visually on the computer screen of the description of the Natural Law Trust. And I'll just summarize it by saying that these are international because they work in most countries and are pretty much honored universally as far as common law, natural law we use, because there are so many inferior common law trusts out there that get people in trouble. Ours keep people out of trouble. We've had no trouble with them. And we use the term natural law in the sense that an amalgamation of all the different types of law in the world, including the Uniform Commercial Code, and harmony with the local statutes of statutory law without being subject to it, without being subject to the jurisdiction of any particular location, makes them sovereign, while at the same time being in harmony with the common basis of laws everywhere throughout the world. And, basic common sense, ethics. So if you operate these trusts in those ways, they are written to best craft the common denominator, the concentrated essence of the best trust construction principles in history, the kind that the super elite have used. All right, at this particular time, I would like to proceed with introducing you to our speaker, and go ahead and let Randall proceed. So if you can hear, Randall, please proceed. You are on, and you are visible. Beautiful.
Okay, can you hear me now?
Yes, please proceed.
Okay, so what did we talk about last month? I have to start keeping my notes, because as soon as I put this stuff out of my brain, it gets pretty loosey-goosey. So I don't know. I think we should, the recap of every month is basically these trusts work for you. You get the trust, you get a certain amount of consulting with it, and I will teach you how to use it for any number of projects that you might have, things you might want to have protected, asset protection, whether it's a house or anything of value that exists in your household, and keeps you all sane.
You could skip the recap if you want, because we've got a lot more topics to cover today.
I'm all for that. Let's get going.
All right. Let me get back to the slides here.
Okay.
Is that visible to you?
I get.
All right.
Oh, okay. This is for this week, right?
Yes, absolutely. Go ahead.
Yes, good. I've been waiting a while to present this material. It's really the general thesis of which we run on. So, origin of trust, where did they come from? Well, they've been around for 1,000 years, maybe more. Who knows where they came from? But it's basically a contract between 2 or 3 people in a trust. You typically have at least 3 people. You have the grantor, creator of the trust, and 2 trustees. And then sometimes you have beneficiaries. So there may be anywhere from 2 to 6 people in it. And the common law trust, the basic premise of it came from England, and it's when the Crusades were happening and the knights went off to wherever they were going to go, and what they did is they found a trusted friend, and he gave him the deed to the estate and said, if I don't come back, then this is how I want this estate handled. So my children have to be taken care of, my wife, all my servants, the land, profit from the land needs to be kept for my family, and some to the church. And so that's how it began. When and how? Well, I just mentioned that the Crusades created a need for the knights to take care of their business. And that's what we use it for now. We use it to take our assets, put them in a trust, have one or two trustees, depending on how well you know them, what your idea is. And this is something that I will coach you on when we get this. When you start to have the trust work from me, we will talk on an individual level on when and how you would use it. And what did they do? They protected the assets just like they would now. And it was a phenomenal event, and it was outside of the reach of the king, because if you didn't own it and you weren't even though you were a subject of the king, you didn't own any property. They were held by the church or somebody that you trusted well, and it went around and around like that. And then it was passed on. As people died, they passed new trustees came in and took over, but the idea was the same. And then today, the Rockefellers have had their trust for probably 200 years, and they have probably, who knows, maybe 1,000 trusts now. And sometimes after a certain amount of beneficiaries, people decide to dissolve the trust and say, okay, here's a pro rata distribution for all the assets in the trust. And what we're going to do is we're going to give you those assets, and we're going to suggest to you that you go and take those assets and put them in your own trust for your own kids and your own desires. And it just gets perpetuated. So there's numbers of different combinations and things you can do and how you use them. Intellectual property can be put into the trust. Physical property, important jewelry, real estate. The only thing you don't put in the trust is a liability, which is a car and an airplane or something that can create a liability. So that's the only thing you have to consider. But it doesn't mean the trust can't lease a car, because then the liability is held by the leasing company. So there are all kinds of ways to allow the trust to basically pay for pretty much everything that's important to your estate. Okay. Another slide. You gotta slide it up a little bit. I can't see can you slide that, Tanzan, can you hear me? Can you slide this slide up?
It's looking full screen to me.
Where's my acknowledgement? Hold on.
Perhaps if you press Command minus, it will reduce the size of the screen to bring it more in.
Nope.
Those of you who can text me and all of us and let us know how it looks, if it looks full screen to you. Okay, we got one comment saying it looks fine.
Okay, well,
Yeah, they're all saying they're seeing full screen, looks fine.
okay, well, I've got to enlarge my screen, so let me.
Command plus or command minus to
Okay,
enlarge.
there it is.
There you
There it
go.
is.
Okay.
Okay,
Thank you,
establishing a
everyone.
trust. Yeah, thanks for your help. Okay, who creates the trust? Who creates one? Well, anybody can create it. In fact, when you become a client, you're going to be, oh, well, there's three options. One option is um, typically you would be the grantor or the creator, and you would choose two trustees, and they would take your estate, you would manage it, and the estate would go into trust and be for your benefit. Now, some people want to be one of the trustees, so they have more direct control on their assets. So you can also do that. In that case, you would get a nominee grantor or creator, and then they step out of the picture. And then you, as trustee and another co-trustee, would go from there. And then you just have to make sure that if you, is that better for everybody? Can people see more of me now? I just
Yes.
noticed that. Okay. I was falling into the ocean. It's so seductive. Okay, so the creator of the trust could be anybody, and there are numbers of ways that we can do that. And I usually talk to people on an individual basis before I really give them a definitive answer. And then they can think about it, and then they can start. Why do you need trustees? Because you have to separate assets from your person. That's the key ingredient of a trust, is you no longer own your assets. So something happens to you, the assets cannot be included in the suit. When you own an asset base, if you own a house, you own a house and then you have a car and your car gets in an accident, then a house can be included in the suit to recover. But when you have it in trust, the trustees step in as the owners of the property for the benefit of the beneficiaries. That's key. The trustees have lawful title to the property, but it's for somebody else, not for them. They can't claim it. And trustees, the number of trustees, you can have anywhere from one to as many as you want. But that would only be for something really big, like let's say you have a big humanitarian project. You might want to have 3 or 4 trustees. It's better to have an odd number of trustees, 3 or 5, because then you just need the majority. Whereas if you have even number, then sometimes you need to have unanimous decision. So that's it. That's who creates a trust. Anybody? Why do you need trustees? Because you got to have the separation of assets from ownership, and how many is dependent up to you. Okay. Next slide. Oh, the trust instrument. What does it entail? Well, it's about 40 pages. It's broken up into sections, and when you get the whole package, I say, you know, get a 3-ring binder, and we're going to break it up into sections so that you can, when somebody says, oh, I want to see the indenture, you can go right to the first part, and there's your indenture, which is the main theme of the trust. Then you have appointments and acceptances of that, and you have a couple of schedules. You need to have a schedule for property. You need to have a schedule for real estate, and then you need to have a schedule that lists the beneficiaries and what percentage of beneficial interest they would have in this particular trust. And when you get the document, you'll find it's in an orderly fashion, and I can easily walk through it with anybody. How flexible is it? It's extremely flexible. It's simple and it's flexible. Yes, you're going to have to learn some of the terminology. I try to encourage everybody to read, if they put it in, if they put it into 5 sections in a binder, then I'll say, okay, did you read your trust indenture, which is the first part? And do you have all the appointments signed? And is everybody signed there? And then do you have a list of the beneficiaries and how much percent that they're going to receive? And then the biggest part, and it will grow over time, is the minutes. And the minutes are like a logbook. I was telling a client this morning that when you go on a ship, you have a ship's log. And every time there's a change in the weather, change in the direction, anything like that, then it's written down, and it's usually held by the captain or one of the first officers. And this is what the trustee can do, or the grantor can also keep that. And the grantor, the creator, and both trustees, or if there's 3 or more, would want, once it's all signed, you want them each to have a document so that they know you can, if you have a question, you can go to them and say, okay, I was looking at this part and I need your help in understanding this. Or maybe the trustee calls you and asks for some clarification, or somebody calls me and they say, hey, I don't understand this. Can you explain it a little easier? And I say, fine, I can do that. And then there's a trust manual, and that's about 30 pages. And that breaks it down into understanding what each aspect is. You know, why you have it, what's it doing, how do you have it work, what do you need to do, what parts do you have to have? You have to get an EIN number in order to have a bank account. But it's very flexible. It's kind of it's like having a dialogue with your trustees, and you say, okay, we're going to run this business a certain way. We're going to offer this, we're going to offer that, we want to maybe change, we want to expand our boundaries, we want to shrink our boundaries. So it's just a matter of sitting down with, let's say for the sake of this story, this one grantor and 2 trustees and 1 beneficiary. So typically the grantor is also the beneficiary, but there can be more. Now, the beneficiaries don't really have a say in how to run the trust, but they can certainly have input. So flexibility is really up to the trustees, and it gets as creative as you want. And if you have to have a little pick my brain, then certainly a viable. Right. Something just came up. So it's up to you. And if you need help, I'm always within a phone call uh, or an email, at least within a day. Okay. Next. Yeah, I talked about this, transferring property into your trust. You have personal property that's on a Schedule A. You have real estate that's on a Schedule B. You have beneficiary Schedule C. And now I also have the fourth one would be addendum to Schedule A, and that's for people that have foreign currency. You want um, you want that foreign currency to be owned by the trust before the RV happens, so that you get the whole thing. So that's another aspect. That's right at the end of the trust. There's only two papers that have to be notarized. One is the trust certification that certifies that it's real and somebody has noted that, and then you want to have the addendum A certified or notarized, because you need to have a date stamp that says you indeed did put this currency into the trust before the RV. And I don't know what your rumors are, but I hear all kinds of rumors about the RV being closer than father. I don't know, but that's not here or there. Okay, next. Okay, what it is, in order for a rule against perpetuities, there has to be a time limit, a date limit on the trust time. So I use my mentor 40 years ago said, okay, just it can be any number, but 21 or 25 years plus lives in being can be the time limit. And then the trustees can renew or not renew the trust. Now, what I mean by lives in being? Well, if you have a family and you have children and maybe you even have grandchildren, then it would be 21 years after the death of the last child. And then the trustees can renew it, or they can just give out. They can say, okay, we've had enough, and let's give all the assets to all the grandchildren and let them run with it. And then if they want to get their own trust, then they can start from there, and it basically would go on as long as they wanted it to. And who can do that? Well, that would be up to the grantor and the trustees. Usually, after so many years, usually the original grantor and maybe even the original trustees may have passed on. So you have new trustees, but the new trustees have the same powers that the original ones had. So it can just go on and on and on. But like we talked about earlier, is you want to always keep it flexible and keep it moving and keep everybody happy so that it can continue on. And who has the final say? That would be the trustees, basically. They're the ones that really say, okay, well, they would confer with the beneficiaries, and they'd say, we're thinking about letting this all go now, and we're going to do a pro rata distribution. And what would you like to do? And there may be enough beneficiaries that say, we'd like to continue this for another 25 years or so. That's how that works. Next slide. Okay. Move this over there. Oh, okay. I've got everybody's stuff on my side of the screen, so I can't see all of the screen. Can you take that off, Tanzan?
We take what off?
Never mind. I'll deal with it. Um, okay, the key people. So grantor is creator, settler, exchanger. It's the person that really decides to create the trust, and then you go out to, you have to choose two trustees, or at least one. You can have one trustee and one successor trustee, but that has to be recorded. And then you have that one trustee does all the work, and if something happens to him, then the successor trustee would step in and take over that role. And then the beneficiaries are the ones that receive the benefit. Now, a lot of the RV people have come to me and say, can we put our projects as beneficiaries? And that's absolutely possible. So that's another way to keep the keep those assets safe for the use of the projects that you may have for the RV or later. If that RV does happen, and there's going to be lots of humanitarian projects out there, some people will be looking for money, and some people will have plenty. Okay, next. Um, Units of beneficial interest is basically you have 100 units. And so you have to break it down into percentages. You might have all 100% of it. But then for most people, I say, okay, well, what percent do you want to have for you? What percent do you want to have for your children or grandchildren? And that can start anywhere you want. And then over time, let's say, one of your children leaves and you have a falling out, then you may want to have his beneficial interest taken away, and that can happen too. How much for each beneficiary? That's very up to each person. That varies. If there's just two of you, then you each get 50%, or could vary. Could be anything, any percentage that you want. Now they're interchangeable. Well, what happens is the beneficiary, say, dies, then the trustees would immediately take back that certificate, and then they would disperse that percentage out to whatever beneficiaries are left on a pro rata basis. Or perhaps the person who set up the trust in the beginning said that if in the case of this happens, I want this child to get this much and this child to get that much. And it can differ or it can be the same. But the certificates go back to the trustees and they're changed. They're non-assignable. In other words, you can't just give them to somebody. And they also can't be touched by the courts, which is kind of a neat thing because the trustees can just take it back and put it in the trust and it stays there. And then when everything is cleaned up, then it can go back to those beneficiaries.
And they also can't be taxed.
Right. Yeah. All of that. Okay, next. Oh, the minutes. Very important. Like a logbook. so you never get lost. You want to, day-to-day things you don't have to record everything, but any major decision that's made that's going to affect any of the beneficiaries needs to be recorded and needs to be um, decided by the majority of the trustees to be able to do that. So the minutes are key. And they can't be, the court can't get them without a subpoena. So they're really kind of essential to not be telling anybody. To go back to who's going to be a trustee, the trustees are under a fiduciary responsibility to keep any knowledge or any business of the trust sacred and not to be talking about it to anybody. So that's critical. When you're a trustee, or even as a creator of the trust, you don't want to be broadcasting, oh, I got this trust, and unless you're trying to get your friend to get one because you are having such success with it, then that's fine. But usually it's private and confidential. And who makes them and who records them, you have to decide that amongst yourselves. I would put it in the hands of the trustee, and when things are recorded and things are signed, then you would give copies to the grantor or whoever might be storing the records. But again, you want to keep them private. How often are they needed? Well, if you have a business going, then I would say, once a month you get together with a trustee and you say, okay, this last month was pretty successful. We did this. We didn't change this. We kept this. Or maybe we made a whole new change. Maybe we took some beneficial units and we, bought another company. Can expand that way. So but they're at least once a year. So let's say you have a portfolio and you just have it sitting in a financial fund that's doing reasonably well, and you get a check every month or every quarter, then I would say whenever you got that check, you would just write in your log that on the first of the month we got another check from this financial process. Okay, next. Oh yes, this is this strikes fear in the hearts of beneficiaries who are demanding and want more. And what it means is that trustees can say, hey, look, see this paragraph right here? You want to read it really closely, because in it states that if you try to invade this trust and demand more, and the grantors have never specified that, then your units of beneficial interest could be taken away. Why does it strike fear? Well, let's say you're making, $20,000, $30,000 a month from the trust, then you wouldn't want to lose that. You'd have to go to work. So what happens is that it goes back into the trust fund, and then trustees can reassign on a pro rata basis. Let's say there's 3 other beneficiaries, then they could split that in 3 ways and send it out on however the grantor would like to. And this is why it's important for the creator to check in with the trustees on a regular basis. All 3 of you need to working this in as a triumvirate. good triangle, good solid organization. Okay, next. Okay, expenses to the trust. All right, there's the important clause. I just talked to a client for half an hour on this morning. And I said, you can't commingle trust funds. In other words, when the money in the trust is there, the trust can buy anything it wants for itself. A car, not a car, but a house, or can enter into a financial fund or whatever. But what you have to do is you have to pay yourself if you're using it for personal purposes. In other words, you want to go shopping and you want to buy some new clothes and you need toothpaste and all of those things that you have to go to Wally Mart for, then you cut yourself a check and then put it in your own personal account and then go buy all those personal things. And then the idea is to keep a record. That's why for the 3 trusts that I use, each one has its own card and each one has its own checkbook. So I'm on the line with all 3 of them, and I can check all the activity all the time. And that's how I keep track. And then with I have a program. I've forgotten what's it called, but it has every time I make an entry, it records it and then it categorizes them. So at the end of the year, I have a categorization of where all those different funds went. So much to rent, so much to automobile expenses, etc. So there it is. Keep records of all activities. Make a log, or at least make notes, especially for anything on a major decision. Okay, next slide. Yeah, well, we just talked about this. You don't have to get a logbook per se, but you gotta figure out a way to keep track of what you did with the money from the trust. Time, date, people, meeting, just like any business expense. You gotta keep track. And then if it's a meeting, if you have a meeting with the trustees and the grantor, then everybody signs and it's kept in the trust records. Okay. Good ship lollipop. Okay, we have another slide. Questions? Anybody got a question?
One person wrote in the chat saying someone has an open mic with a video game playing in the background, but all the microphones are muted. So I don't know how that would be occurring.
Well, I can hear a little sliding. I can hear something, but it's not distracting to me.
I have no idea. Well, if anyone else gets more information about it, let us know. All right, so this is the questions session, everyone, and you can either type it into chat if you're working on the computer, or raise your hand by clicking on the raise hand icon, and if you're calling in by telephone, press *9. And in chat, we have, how much does it cost to set up a trust for the RV? Well, that's basically the $2,500 or $250 per month if you don't have $2,500, $250 a month for 10 months. and if you're anticipating the revaluation of currencies and you wish to have your currencies titled to the trust prior to the RV, and you can afford to go ahead with your 2,500, then you can get it done within a few days. Randall generally is very good at delivering it within, what, Randall, a couple of business days after they've submitted their form?
Right. That's what's been missing lately is people have signed up, but then I'm running after them to get their form in. And let me put it this way also, is that if you put your first $250 in, then I will get to you, and I get your form. I will get you the two valuable papers that you need to have notarized, so that you may not have the whole trust until later, but you'll at least have the trust. You'll have the trust owning the currency, and you'll have an EIN number for it, and you'll have the trust manual. So you'll be starting on your way to success.
So
Anybody else?
that's a short answer to quite a question that could lead to a lot of different directions. But let's move on. We have a bunch of others coming in here. We'll work with you personally to set up a trust. I guess you mean to say, do we work with you personally to set up a trust? Randall? I think the person is asking, do you work with each person one-on-one?
Yes. Yeah. The beginning of it is through email, and then if it gets too intense, I welcome a phone call. But I'm
in other words,
limited.
it is customized. Yes, every trust is customized one-on-one for each client.
Right.
Absolutely. And Matthew asks, all good. What are the pitfalls, if any, with common law trusts?
Pitfalls?
Uh-huh.
Somehow you commingle funds. That's a pitfall. If you're not keeping minutes, that could be a pitfall. But if it's done correctly, I have yet to find a pitfall for me. 45 years doing this.
And Matthew, if you mean, are there pitfalls or disadvantages to a common law trust in comparison to a statutory trust? I think, Randall, you would agree that all of our experience has been that there are very few, if any, disadvantages.
Oh, compared to a statutory trust, no. That's why I caution everybody not to get a lawyer as a trustee, because it'll automatically change it to a statutory entity. So that would be a pitfall. Don't get anybody that's connected with a court as your trustee. But other than that, it's fairly simple. I mean, if I can do it, anybody can do it. That's how I feel.
Yes. So everyone who hasn't already heard this, just as a reminder, we caution, bless their hearts. Most attorneys have good intentions when they start out, but they're part of a system that is kind of changing right now, isn't it, Randall, on the global scale? It's kind of going through a transformation. But traditionally, bar licensed attorneys are brainwashed and educated along a single line of thinking and have not been privy, have not been initiated into the deep secrets that the elite has kept closely guarded for generations of asset protection. And that's what we've been fortunate to inherit, is this special knowledge which is not taught in law schools. So if you go seeking an opinion from a licensed law professional about these trusts, they will usually be afraid of them. They will usually steer you away from them because they don't
Right.
understand them. It's fear of the unknown. But it's also ignorance, because I like that saying, don't interrupt the person who is doing it and tell him that it's impossible when he's already succeeding. You know, he's successfully doing something, and you you can't go in there and say it's impossible when he's been succeeding with it for years and years and decades, you know.
Well, like I said, it's a very flexible document. I think I've never really seen a statutory trust. I'm sure it's a little more defined, um, and it's under the context of the court. That's the only problem. But I'm sure there are some lawyers out there that be able to understand and do a natural law trust, but if they do it for you, then probably it's going to become statutory just because of the direction it came from. So if you do your own natural law trust and you follow the basic paradigm, I mean, there's certain laws you have to follow for making it all happen. But the flexibility is much more than if you go to an attorney. I mean, my parents had an AB trust written by an attorney, but that was their good friend, and she took care of them very well. But it was still a statutory trust, and I didn't like it. I didn't like the way it read, so I just left it alone.
Well, most statutory trusts have a good 100 to 1,000 more rules to follow.
Sure. Well, they're under the auspices of the court.
And they don't really improve the asset protection,
Mm-mm.
if at all.
Well, I don't, I think a well-written statutory trust will hold up in court and protect the assets. But again, its tendency for it is to go to court before it's resolved in arbitration, or, just talking it out.
Right.
But again, the trust can be sued if it damages. If it creates damage, then it can be sued. And it can sue. Let's say a trust has a piece of property, and some yahoo comes driving through the fence and crashes into the house. Then that trust can sue that person for negligence and damages. So you can use the court system, but you would go into the common law court, or one where it's a personal. What do they call them when you go into the people's court? So it's not represented by an attorney.
Okay, 360, I'm going to unmute you. You are on the air, 360-688. You have a question?
Yes, I do. 360, it's in Washington.
Yes.
I'm going to be relocating overseas. My number one trustee lives in Virginia, and my number two trustee lives in Arkansas. Is that going to make a problem? Because you were saying we all have to get together and sign some papers every year. And I will be relocating to Asia. That's really quite a long trip.
No, it can all be done by fax or scanning. Let's say you're doing.
Okay.
You've already got it created. You've got your trustees have signed. I have clients that take the whole 36, 40 pages and they sign where their name is. Then they put it in a express mail or priority mail envelope and send it to the next person, and then they sign it and they send it to the third trustee. Now, today, scans are as legal as faxes and blue ink paper. So that's easily handled. And telephone calls are pretty easy. Skype, you can Skype information. You can have a Skype call with both your trustees on a three-way Skype call, and then you each write notes, and then one of them collects them all, and they go into the trust folder.
Well, at the minute, I don't have the money to open a trustee account. I have to. So how many days do we have after that reevaluation happens and we do get some money?
I believe, well, let's put it this way. My understanding, this is only a rumor, is that you're going to have 3 months to make a decision on what to do with the money, how to play it out. Now, there's that, and then there's, what was I going to say? I lost my train of thought. There'll be time, and I think, I don't know how it's going to work. I keep getting asked this all the time, but it may be that you're going to go to a meeting place or an RV center, and they're going to count your script, and they're going to give you a safekeeping receipt. Now, that can go, if the trust, if you've paid at least $250 and have the name of the trust and the EIN number for it, then you're all set. You can use that trust to open up an account, whether it's in a major bank or a minor bank. Well, it won't matter. Because once you get this trust, you're going to be able, if you're in Asia or you can go to Hong Kong, it's all wire transfer. I do electronic banking to the mainland because I don't have banks here that I like. So I just do all electronic stuff anymore with the banks. It's getting easier and easier. And so
you're not worried about the hacking?
I'm not worried about what?
The hacking. Some of the banks have been gotten into it. Okay, all right.
No, I have, well, HSBC, Bank of America, Wells Fargo, a trusted bank. And I think, I don't know, but I think when the RV happens, it's going to be such a flood of new currency, and that banks themselves, like I've used blockchain before, and my understanding is that now the banks are all switching over to blockchain security. I don't know if you're familiar with it or have ever heard of it, but
no, I'm not.
Well, you can Google it and look up blockchain, and it's a new phenomenal way for security for anything.
So should I get up with my bank here in Washington, the one that I use, to see what they've got along that line?
Yeah, get your 250, and I'll get you the 2 papers that need to be notarized, and then you can go to your bank and see what they're going to do in the future. But you really need the whole document to open up a bank account. The banks want to see the whole 40 pages, or at least part of it. I'll coach you if you send me an email.
I don't have a computer.
Oh, you're on a phone. Well,
exactly.
I'll leave it up to Tonson to give my phone number out to you, and then.
Well, you'll have it anyway when you become a client. Once you've paid your $250, you'll have Randall's phone number and can communicate with him that way.
Yeah, well, I'm not afraid to work with you at all. So I'd rather coach you in the early days, so that you can feel confident about when you're going to Asia. Soon?
Probably in about a year, maybe.
Oh, well, you'll have time.
I mean, but as you can tell, I've had a lot of things happen in my life where, you know what I mean, so I have reasons to be cautious and leery.
Yes, and there are banks all over the world that are very secure.
Mm-hmm.
So you'll find something, especially you're going to Singapore, you said?
No, I'm going to the Philippines.
Well, Philippines, okay. I'm sure
Mhm.
there's banks there that are as secure as any other place.
Yeah, but I'm keeping my bank here in Washington also.
Well, that's fine. That's not a problem because you'll have electronic communication with your bank. We'll get it. We'll get
Mm-hmm.
it. So if you're not going for a year, we'll get it set up so that by the time you leave, you've got your trust document and you've got your account open and you've got your currency all accounted for, and you'll be set to travel. And I'm sure you.
Yeah, because I figure 6 months to a year. A lot of it depends on the RV as to how soon I can do what.
Right. And your bank will probably give you information or help in saying, look, I'm going to the Philippines and I need to make sure that I can communicate with you and that my communication with you is secure.
Mm-hmm.
So they'll
Yeah,
help. They'll help.
yeah. And I'll open up a bank account in the Philippines as well because you got to be able to. You
Yes.
never know what's going to happen. Yeah.
No, you want a local account as well.
Yes, definitely.
You'll have it. You'll have both of them. Do they use dollars in the Philippines yet? I think they were when I went to Vietnam.
Well, when I was over there a long time ago, dollars were being used, but you also there's the exchange rate, and
Sure.
I think I'll be okay. I think I can have a bank that has dollars. I can have dollars in it, and the other ones I can have pesos. So
Yeah,
some things I gotta check out when I get there.
sure. But by the time you get there, it'll be a year, and you'll probably have the whole complete trust, and you'll have your electronic setup.
Hmm.
You'll get a computer, learn how to use a computer, and you'll be all right.
Yeah, I have a good backup team there. Hmm.
Good.
Yeah, 'cause I figure a year at the most, 6 months would be nice, but we just have to see. We don't know what's happening, you know?
Absolutely. Nobody knows what's happening tomorrow.
Okay, well, thank
Yeah.
you.
Well, I'm quite sure I touched on points some other people were wondering about themselves as well. Okay, well, thank you, and
Yes, thank
we'll
you.
get up with y'all later. Bye-bye.
Okay.
Don't hesitate to call if you need some help.
Okay, next we have 901, area code 901. You're on the air.
Yeah, this is Troy Edgington in Nashville, Tennessee.
Hi.
Welcome to Nashville.
Yeah, it's pretty good up here. Revocable and unrevocable. Okay. I kind of understand it, but my wife was concerned if you put money into an unrevocable trust, you're not going to be able to move it. Is that true?
Move it where?
Well, move it into projects, change
that's not-
beneficiaries,
not
add
true.
beneficiaries.
Nope, it's not true at all.
Okay. Well, I didn't think so, but I had to ask.
Yeah, a revocable trust set up for people who just want to use that to not have to have their estate go through probate. That's the only thing a revocable trust does. Some people feel safe, they want to have control, so they do a revocable trust, but it just eliminates probate. An irrevocable trust can do whatever a normal person can do. It's irrevocable in the sense that you can't take the money back, but trust can invest that money, can buy and sell real estate, it can do anything that you would do if the money was in your own pocket.
Okay. In other words, you as a grantor can work with the trustee that you appointed to work different projects,
Sure.
whether it's humanitarian and business or investments
Yep.
of that nature.
Anything. They can take you to the ball game and you can watch the Red Sox while you eat a hot dog. Have a cold beer.
Okay, that answered pretty much everything. I mean, you can add or delete beneficiaries if it arises. In other words,
Yes.
and I heard you say that a little while ago too.
Yeah. You can add beneficiaries at any time. You can change the percentage ratio that each one would get. Children will grow up and get married and have their own children, and you have the ability to add those grandchildren to the beneficiary list if you so choose.
Okay. And if you start a business with the money that you put into the trust, and it's agreeable between you and the trustee, is there another trust needed to be started, or would that be a sub-trust in this trust?
You don't need to do that. You can have a couple of businesses in the primary trust if you choose to do that. If you have if the businesses get rather large, then I would suggest a second and third trust for those other businesses, so you separate out those assets. Because every time you have, like if you have 3 businesses, then there's some liability in having a business. So you might want to separate those out. Just like you have 3 houses that the trust owns. The trust buys 3 houses, 2 are rental, 1 is for you. Then I would have you consider having each one of those, especially the rental houses, in their own trust, just to keep it all separate.
Okay. Well, that makes sense.
Just like having.
Would you have? Go ahead.
Just like having it in your own pocket. You don't want all your assets in one pocket. So it would be the same when the RV goes and there is a significant sum, then that's when you think about what you want to do and how you want to break it up. You can start with the initial trust and go from there.
Okay, yeah, and the humanitarian projects would probably definitely have to be in a different trust, but they could be funded from the original trust. Would that be correct?
Absolutely. You can.
Okay.
You use that money to create a new trust and then to fund that particular project.
Okay.
Randall, for the benefit of our guest in Nashville, as well as everyone else listening today, it might be useful to review the fact that you can choose. You have 3 different ways you can go with regard to trustees. 1, you can appoint a friend or family member as your trustee or trustees, because you need at least 2 or 3. 1 current trustee and 1 successor trustee, or 2 current trustees. Those can be friends or family members.
No. Yeah. If you have 2 trustees, one of them has to be non-related.
One has to be non-related, right. Excuse me.
Okay.
And choice number 2 is you can be one of the trustees as long as a number of other conditions are fulfilled. And we won't go into all of that right now. Suffice it to say, as long as certain rules are followed, you can be one of the trustees. And
I had a woman this morning I talked to, and she hadn't heard that idea before, and she immediately said, "That's what I want," and so setting it up. So you really have three choices, and I'd be happy to explain. Well, I can give a brief summary right now. One is, you're the grantor. You have two friends, or one friend and one family member as the trustees, and then you're the beneficiary. If you want to be one of the trustees, then you have to get a nominee grantor, and then you have to have a non-related second trustee altogether. Or you can be a sole trustee and have a successor trustee, that if something happens to you, then that successor trustee would take over that other position. Now, one of the conditions on that is if you are the only trustee, you can't be the sole beneficiary.
Right.
And the
Okay, that
third
makes sense.
option, the third option is to hire a professional trustee. And so Randall and another partner and I have an organization that provides professional trustee services. And that's usually more of interest for people who work internationally and who don't have people locally convenient, or for whatever reason they are changing the circles they travel in and no longer
Right.
associate with their previous relationships or whatever. There's a variety of reasons. I don't know, I would say usually that's the least desirable way to do it.
Well, that's definitely an option. That's a good option, because I was wondering, when you run out of trustees and people and friends and that, who do you call?
Right.
Yeah, but
Prospectors.
Randall made me laugh one time when he said, well, these people come to me and they don't know anyone anywhere on the planet they can trust. He said, what kind of life have they been living?
Yeah. There's a few out there, believe me.
Yeah.
Okay. Well, thank you. Thank you very much. I appreciate your help.
Welcome.
Thank you.
All right.
Okay. We have area code 406. Are you there?
Yes. This is Tom in Montana.
Hi, Tom.
And a couple questions really related to setting up a banking account. We know the banks are getting tougher and tougher in many areas, new accounts being one. Any challenges there for people, or do you have banks that you recommend?
I had to shop for a couple of accounts. Hawaii didn't want to deal with the trust the way I wrote them, but then I found a credit union just down the road from them, and they said, oh yeah, no problem, we'll open this right up. So some people walk right into their home bank and they have no problem. When I say that, if you have a co-trustee, you need to take both trustees if you want to both be on the bank account card. Now, if you're the only one that's going to be on the account, then you don't need to take that second trustee. But it just depends on what you're doing. But I haven't had many people call me and say, I can't find a bank. I say, well, maybe go across town, buy another one. Usually I never hear from again because they've got their account open.
Tom,
So it sounds like people are, oh, go ahead.
Tom, do you have Columbia Bank in Montana?
No, we don't.
Well, it's a Northwest bank, and it's one of the best banks in America, and they've accepted all of the trust accounts we've brought to them. But I think they're only in Washington, Oregon, and Idaho, maybe one other state.
Yeah, I have children in Washington, so we get there a lot. So that would be okay. Columbia Bank.
Yeah.
Are they okay?
They were
Yeah.
in the Forbes top 20 banks in America in 2015.
Okay.
They have
So
this
they
philosophy
take.
that relationships rule, and they walk their talk.
Okay, great. Then I've got a couple foundations that I work with and that I set up, and they, I've got bank accounts with those. But it seems like in Montana, the banks need to have records that you're certified with your Secretary of State. And now we wouldn't do that with this trust, would we?
No. What,
So yeah,
well, that's one reason I have a notary page on one of the sheets, because that's your certification right there that the trust is real. I've never heard of having to file for a state filing. That's when you do that with a county, you're actually going into the statutory process.
exactly. And that's why I haven't tried this for a couple of years, or I haven't dealt in the area of opening a new account, but it seemed like that's one of the things they wanted. But I guess like with Columbia Bank, Johnson, that they don't want that, obviously. Is that the case?
A registration with the Secretary of State?
Yes.
No, all they need is the EIN for opening the account, which is just the IRS calls it the employer identification number. For those of you in foreign countries, you get a business number for identifying your trust, and that's useful only for banking purposes and not for filing tax returns. That's all they require.
Okay. So, yeah, I didn't know whether this is peculiar to Montana, and maybe there's a way to get around it. I didn't really dig into it that far. So,
yeah.
Well, anyway, that answers my questions, and that's good information about Columbia Bank. That would be we're in Washington quite a bit, and obviously you can do it electronically anywhere. So, yeah.
Well, for the benefit
okay,
of
well,
you
good. Well,
and for everyone else listening, we have never had a client of these trusts who has failed to get a bank account open somewhere after a few tries. I mean, if the bank says no, they might have done you a favor because they may not be good to deal with anyway. And so thank them and go down the street to a different one. But we've always had our clients find a bank somewhere.
good. Okay.
Yeah.
Well, that's the end of my questions then, so thank you.
Thank
You're
you.
welcome.
All right. Area code 450. 450.
Hi, this is Marianne from Quebec, Canada.
Hi.
Hi, Randall.
Hey, Marianne.
How are you?
Oh,
How are you?
good. You?
Good, good. Okay, I'm moving forward. I followed your advice to get my kids as beneficiaries. Now, my question is, how do I get the funds to them? Do I open a trust account in the name of my trust, or how does it go?
Okay.
How can I get funds?
Run that by me again. You want to open an account for your kids?
Yeah. So that they get, because I put them beneficial units.
But they don't
of
have
interest.
They don't have a bank account
Okay.
already.
Well, they have bank accounts. Yeah.
Well, just give them.
But they don't.
Just give them funds out of the trust. Just give them funds from the trust. Just write them a check. Let them put it in their own.
Okay. Oh, that's it. Okay. Great. Great.
Yeah.
And okay, who opens the bank account? Is it the grantor and the trustee, or just the trustee, or
Trustee.
just a trustee? Oh my God. Do I go with the trustee?
Are you a trustee as well?
As a grantor? No, I'm a grantor. Grantor, beneficiary.
You're going to go with a trustee, and you're going to sit down, and you're going to say, we want to open up a bank account. Now, in the a number of years ago, I could go to any bank in California. Yeah, that's more than a few years ago. Anyway, and they would let the grantor or the manager be on the signature card as well as a trustee. But lately, most, especially Wells Fargo, shut down one of my clients for a while because they only would allow the trustees to sign. Now they got it eventually because one was in California and one was in the East Coast, and they had to coordinate the time and both show up at the respective banks to sign in front of a bank officer, and then they did electronic movement and it happened. But that was, they'd still got the account open.
Well,
Okay.
I would recommend staying away from telling the bank that you are a grantor, because then they might think, well, they are responsible to the interests of the grantor, which is not true because these are irrevocable trusts. So if you're also wearing another hat, like beneficiary, that would be the word to use. Yes, Randall?
Or the manager, general manager.
Manager, right.
Yeah. Okay, I'm
Yeah.
the manager and she's my trustee.
Okay, so you both walk in and put your sweet faces on and sweet talk them in French.
With our 5 pages, with our 5 pages, everything notarized and everything. Great, that I get. Okay.
Yeah.
Now, what about the credit card in the name of? How does that work? Credit card in the name of a trust.
It depends on the bank, but usually on my checks, it's the name of the trust and me as trustee. And on the credit card, just my name, but it's attached to that same account.
It's attached. It's your name, but it's attached to the bank account, the trust bank account.
Yes.
Exactly. Okay, good. Last question. I still don't get the difference between employee and hiring someone to do something. Like I really got your message when you told me, no, your trustee is not your employee. I got it.
Yeah.
But I'm still going to give her something. I'm going to give her money. I'm going to give her, what's it called?
It's a trustee fee.
Oh, it's a trustee fee. So she has to declare that in her tax.
Well, depends how much you give her. I mean, you could just,
Okay.
I don't know what you want to work as a accounting system for the trustee. How much work is she going to do? If she does minimal work, then just take her to dinner once a week. If she's going to do a lot of work, then she'll have to either pay her cash or she'll report it.
Okay.
So that's a personal thing for each person.
Okay. We'll get back to that later on then. Okay.
Yeah.
So I don't have employees. That's it, eh?
No.
I don't have employees.
No, and if you hire somebody to do something, if you hire somebody to do something, you just write a contract. You don't employ them. You say, okay, I want you to do this job and I want it under contract. And then you just pay it under contract rather than employee.
Okay. Because we want to stay away as much as possible from employees if it's not necessary. Okay, got it. Well, so good. So far, so good. Thank you so much.
Merci beaucoup.
Yes.
I'll be emailing more questions.
Okay.
Bienvenue. Bientôt.
Merci, au revoir. Okay, next question we have on the chat. If the trust pays you as the beneficiary and that goes into your personal account, is that money seen as taxable income? Well, yes, if you are a taxpayer.
Yeah, if you're a taxpayer.
Out of the trust.
Yeah, that's a personal decision you'll have to make. That's why I have the trust pay most of the expenses except for anything really personal. And then I pay myself, and I don't care about the consequences.
Yes, it's very individual because many people have moved into individual non-taxable status, but
Right.
that's a whole separate conversation, and it is not the venue of this trust webinar. Suffice it to say, whatever is in the trust or transactions made by the trust are outside the taxable reporting venue.
Yep.
And from Tim, he says, I have assets in the form of stocks. Can I start a trust with them?
You mean you want to trade the stock for a trust? Or you just want to use those to start the trust? Yes, they can be the first asset that's put in the trust.
Right.
You'd probably want to change the name on the stock to reflect the name of the trust if it's in your name now.
Right. So you'd change title of ownership of the stocks to the trust, and then any capital gains on the stocks would be non-taxable.
Right. Well, because it's going to go in at, it's just a trade. You're not, it's not like you're selling it. When you put something in a trust, even though it might be worth $100,000, you're going to become a beneficiary of that. So there's no taxable, that's not a non-taxable event.
And Tim also says, also have a court case as a defendant. Tim, we're not quite sure what you mean by that. It does not really related to the trust. Neville asked, question, what is the difference and advantage between an international natural law trust and a bloodline trust?
Bloodline?
Right.
Oh, probably something that's been in your family. But it just depends on how that's written. Is it a natural law? Is it a non-statutory, or is it statutory? I don't quite understand. Never heard that term bloodline trust before.
Well, could we say it this way, that one of our natural law trusts could be made into a bloodline trust if you so choose? Meaning you pass it on to your descendants?
Well, that's typically what you do anyway. So I guess bloodline, if you have the beneficiaries of those only in your immediate family, then that could be considered a bloodline trust, I suppose.
Right. Okay, next question. Hansen, you mentioned that beneficial units cannot be taxed. Can you please explain that further? I'll just say a little bit and let you follow, Randall.
Okay.
They are not traded on stock exchanges. They're not traded on the commodities market. There is no public tradable exchange anywhere, so there is no publicly determinable monetary value.
Right.
That means then if any agency were going to try to tax it, you'd say, fine, can you help me figure out what the value is?
Yeah.
Yeah. There's no publicly determinable monetary value, and therefore how can they be taxed?
Especially when you've traded or exchanged or assigned. That's why assigning your currency before the RV is that it's a non-taxable event. And who knows what's going to happen after the RV, but anything that goes in on a current basis and you receive beneficial units for it, then that's a non-taxable event.
All right. Dale Elizabeth says, you have said before that document signatures match the ID information. Does that mean to use full middle name if it is used on the ID? Or is
Yes, whatever you had this question this morning, actually. I said, what name do you use on an everyday basis? What's on your license or your passport? I mean, my passport's different than my license, but I use the common name that I have, and that's all on all my paperwork, and I don't have a problem with it.
And she asks, is the initial D, initial E, and then XXX enough? Well, my question back to you is, if you're ever going to do any commercial transactions in a public institution with your trust, such as a bank, how are they going to confirm that you are who you say you are? So I'm putting the question right back to you. You've got to have some kind of a name statement in your trust that matches something that, you know,
Yes.
the public agencies and institutions are going to recognize if you want to make claims on signatory control over an account or withdrawal of funds or beneficiary receipt of funds or whatever.
And that's typically, either your passport or your license.
Right. Now, if you don't care about ever proving that you are who you say you are, to any commercial entity, then maybe it doesn't matter. But most people need to transact business in the system using these trusts.
Sure. And you won't be able to open up a bank without an ID anyway.
Yeah. Okay, so another question similar to the one asked before, is the money we take out from the trust, like via check, is that money considered revenue and taxable? So, yeah, we answered that before.
Right.
The next question,
Well,
you
if
said,
it's
you want to
used,
say more?
if the trust buys whatever commodity you're getting, then it's a non-taxable event. But if you receive a check from the trust as a trustee fee, then you may be liable for that if you're in the system.
Which raises the question, Randall, are there instances in which you feel that the trust could pay the mortgage of one of the trust officers and that officer could live in that house?
Sure, you could be the caretaker.
Right. So,
yes, the trust buys the house. I just went over this morning. This is my second lecture today. The trust would buy the house, and anybody, they can choose anybody to be the caretaker of that house, and they can pay the mortgage. Trust can pay the mortgage, pay the electric, pay repairs, etc. You have to. The trust is responsible for that asset, and you have to do what you would do if you own the house in your own name. You'd try to keep it up as well as you could.
Yeah, and those are non-taxable transactions.
Right.
Because the ownership of the house in the trust is not a taxable event, and the caretaker living in the house does not create a taxable event.
No. That's typically the case. You caretake the house, you're responsible, you trade your work for living in the house. A lot of people have that.
All right, next question from Mata. You say the trust is multi-purpose. Does that mean the same trust can be used as an asset holding trust as well as a business trust, or would one do two separate trusts?
It depends on whether your business is potential liability. That's the only way I would separate it out.
And how big the assets are.
And the assets. But the trust is set up to do anything any human being can do. So business, hold assets, any of the things that you would think about doing. And all we're saying earlier is that if the assets start to get too big, then now that's the time to think about breaking up the assets and putting them in a couple of different trusts or another trust. It depends. You'd have to talk to me on a personal level before I would really give a clear answer for that.
Okay. Chef Herbert asks, is the International Natural Law Trust the same as a living inter vivos trust?
Well, usually a living trust is a revocable trust. So um, inter vivos means it was created during your lifetime. Um, so I wouldn't put that title on it. I would just call it, when I talk to people about it, I say it's an irrevocable, personal irrevocable trust.
I mean, yes, it can be used and should be used while you're alive. However, no,
Yeah,
the living trust is typically a statutory entity.
right. Oh, well, thank you, Paulette.
Lori asks, what about the IRS and the RV in terms of pitfalls?
I have no idea. I don't know what I don't know what's going to happen at
A
that
couple of
event.
people ask what the RV is. We want to just say one or two words about that.
The reevaluation?
Yeah.
Well, you probably have more experience on that level than I do. All I know is that I coach everybody. Look, if you got currency, you got to think about putting it in trust before the RV happens. And I guess that's a global reset. What is it? GR, you know it. You know the term better than me.
Well, for those of you who have not been familiar with it, very briefly, there are many undervalued currencies because of the wars, financial and economic and military wars that have been going on, where they go into a country and devalue its currency. And then when the war is over, they usually forget to put it back to its
Right.
original value. I say forget
Right.
kind of facetiously. So Iraq and Vietnam and some countries like that are examples, Indonesia, Zimbabwe. And so these countries, people have been buying their currencies for pennies on the dollar with the expectation that at some point they're going to return to their true value. And in fact, there are forces trying to make that happen. And then you're an overnight millionaire. And so many people have obtained our trusts with the expectation that they'll have this new wealth to put into these trusts. And the IRS is expected to become more of a tame organization, less violent, less invasive, perhaps more of a service organization. And whether there'll be a tax individually assessed on the capital gains from the currency purchases and revaluation, who knows? There's lots of controversy on that. Some
Right.
say yes, some say no. But if it's titled to the trust prior to the RV, then when the revaluation occurs, it is occurring in a non-taxable entity.
Good explanation.
Next question from Joby. If I am the trustee of the common law trust, can a family member step in as a trustee to continue the trust? He means, or she means in her passing. So if I'm the trustee of the common law trust and then I pass on, can a family member step in as trustee to continue the trust?
Is the person the grantor? I mean, yes, somebody's got to step in. It's always better to, if you have a family member as one of the trustees and you're the grantor, then I would suggest a co-trustee not related. It's just more separation, the better. So a family member could step in, but then I would suggest that another non-related co-trustee steps in. But it's possible for a family member to, especially, okay, so here's an example. Sometimes I have a client that's the grantor and the sole trustee, but he's not a beneficiary at all. It's just this goes to his children and his grandchildren. So in that case, because he's not getting any benefit out of it, then that's a permissible action. But he couldn't be one of the beneficiaries.
Yeah, and here's
Now,
another example from my own experience is that my father had a trust, appointed me as successor trustee, but since I'm a member of his family, we had a non-related additional trustee outside
Sure.
the family as the second trustee. But I was appointed as successor trustee, and then when he passed away in 2008, I just took his death certificate and the appointment of successor trustee document, walked into Wells Fargo Bank, and they made me signatory on the account.
Yeah. Yes, that could happen. And I just caution anybody that if they're intimately connected with if they're a trustee and they're a family member, and then all family members are beneficiaries, that they are diligent in how they dole out any funds and how they spend that process, and how to be really certain they don't commingle and they make good notes.
So as to prevent problems.
Yeah, the more minutes you make for what is being done, the better off you are.
There you go. Mata asks, how does the trust deal with cryptocurrencies?
Same way a person would. In other words, it comes in, you can buy cryptocurrency, you can trade it. One of the drawbacks of Hawaii is that they disallowed cryptocurrency trading, so I can't do anything with them. But, so I just leave it to somebody else. But yeah, the trust can buy and sell and trade cryptos. It's like any person would be able to.
Mm-hmm. Usually access to the wallets are done by passwords and all that, but wherever any kind of title, if there is one, written anywhere as to the ownership, it would be able to be put as the trust name as the title of the owner.
Sure. And that's where I found out about blockchain is I was involved. I had to go vicariously around the state. But the guy used blockchain for his security, and it never got he couldn't get breached. It's such an incredible new security feature that even governments are starting to use not cryptocurrency, but blockchain. You're going to see it more and more. It's phenomenal.
Yeah. And perhaps minutes. I mean, like you were saying a minute earlier about minutes, if you have cryptocurrencies, you could just write it into the minutes. Such and such a trust has just purchased such and such a cryptocurrency, and here's the hashtag, and here's the wallet
Receipt.
ID and address. And
yeah. Yep. Yeah, the password and those things are like 40 digits long.
oh yeah.
So you got to be careful to keep them in the right order.
In which case, it's good to mention that it's good to keep the minutes both in your computer and on paper in a notebook.
I would. Good old logbook. Computer's always subject to crash, or at least have a good thumb drive and update your thumb drive as often as possible.
Yeah. Neville asks, what is the impact if the trust is funded after the RV?
I don't know, because I don't know what is going to happen at the RV. I don't know how it's going to be played out, how it's going to be paid out. And whether there's any tax agencies involved. But if you didn't get your trust before the RV happened, then you just have to put that whole amount into the trust, or whatever amount you wanted to.
Yeah. All right. And Ian asks, if you are grantor and beneficiary of the trust with trustees, I guess with trustees means the trust has trustees, and you step forward also as the managing director, could you please explain further the role of the managing director and how the trustees and managing director work together?
They just do separate jobs. Usually the general manager will do the day-to-day business dealings of the trust. And the trustees would just have to come in when any major decision needed to be made, whether it was to do another portfolio or sell a piece of real estate, then that would all be discussed. But the executive manager, the way I have it in the paperwork for the executive manager, is you're doing the day-to-day business of the trust work.
And if the bank allows, it'll allow you to be signatory on the account?
If it does, and you could also, there's ways around it. We can, you keep getting shut down as general manager, then you can have the other two trustees appoint you as a third trustee. Then you'd have to be careful of who the beneficiaries are, but it could all work that way too. It just you take care of the day-to-day business as an executive manager. You get follow-up reaffirmation from the trustees, and then goes from there.
Okay. Lori asked, if we set up a trust for the RV, can it be used for our adult children's benefit and for philanthropic ventures as well?
Yes.
And she says, also, in naming a trust, is it best to use your legal name list as a family trust or use something more creative?
Whatever you like to have.
Yeah, in other words, there's no particular book of rules about that, right?
No, the only one situation I had a couple of weeks ago is a woman had a name that she wanted for a trust, and when she filed the EIN number online, somebody else already had that name, and so she had to change the name on her trust. But that was all it took.
Yeah. So here, this question is from N. How would a natural law trust change the nature and characteristic of our relationship to the all capital letters name? Does it make it clear that we as the living man, woman are not the surety for the entity?
Yes. The all capital letters won't even be in the trust. And that getting rid of all of those capital letters is a process in itself. And there's a couple of companies out there that are beginning to do just that. And they're very good at what they do. So we'll talk about that maybe another time.
Well, very briefly for the benefit of everyone else, if you ever look at your driver's license, passport, any official document from the bank, they always put your name in all capital letters. There's a reason for that, which most lower ranking clerks don't even know and don't think there is a reason, but there is. the top of the hierarchy designed it that way decades ago to create a separate fictitious legal entity representing you, and then they can do what they want with that and issuing bonds and trading on international markets. And
Right.
so there's been a technology proceeding for the last few decades that is coming of age now, getting more mature, learning how to take control of that name so that
Yeah.
we, the living man or woman, can take control of our name that was created with the all caps. But these trusts have nothing to do with that. They are not dependent upon one's having documented one's improvement of status. So one can continue with the way the status is that most people have and operate these trusts successfully. But like Randall said, they deal with you, the real living man, in your upper lowercase name. They don't deal, with the all caps name, except that if you go open a bank account in the trust name, they'll probably put the trust name in all capital letters.
Yeah, probably. And that's okay too, because it's just the way they do it. And but when I did this particular process with this one group, I had to get my original birth certificate from the state, and I was really happy when I saw that the original birth certificate with a gold seal on it and stamped was upper and lowercase for my name. So the original birth certificate, if you inquire about it, is going to be in upper and lowercase because they're treating you as a human being baby, not an entity.
Yep.
So only when you go get your first job and have to get a social security number that it all goes to up in smoke.
Mata asked, can the manager open a trust bank account?
Sure.
If the bank allows?
If the bank allows, for sure. But as I suggested earlier, if I were you, I would take a trustee with me in case the bank said no.
That was her next question. Must the trustee be present?
Yes.
Usually.
I would recommend that because I've had people go to the banks by themselves and they say, well, we need the trustee here. And so then they have to go, and that's wasting a half a day. So take your trustee with you when you go to the bank. Or if you want them both on the bank card, then take both of them, but all should show up together.
Joby asked, and we may have answered it since she put it into the chat, but we could answer it briefly again. Can the trust pay the mortgage, rent, and utilities of the trustee or the beneficiaries?
Sure. Especially if it owns a house.
Mm-hmm.
Or let's say the house is being rented, but the trust can pay those expenses. But ideally, the trust isn't getting any benefit out of that. So I would save that ability for when the trust buys the house and then you become a caretaker and then the trust pays all the necessary expenses to go with it.
Should a certain kind of minute be written to that effect?
Sure. Write minutes every time you make an important decision. Absolutely.
Mata asks, can a non-grantor put assets into the trust?
Yes. Yes, trustees can. I just have a client now, and she's going to be a trustee, and she's going to get a nominee grantor, and she's the one that's going to put her foreign currency into the trust.
Paulette asks, or just says, thank you for sharing your experience and insight so generously. I learned a lot. Thank you,
You're
Paulette.
most welcome. It's a I mean, I've just held on to this stuff for so long. I'm really grateful that I can share it, especially with so many good people.
Absolutely. Thank you. And so I guess we're getting near the end, but we'll just say here that this will be posted on YouTube for playback. We'll announce it in the newsletter. Lori asks, can a primary trust set up another independent trust for adult children to own and operate that they may pursue whatever they choose?
Sure.
When she says, can a primary trust set up another independent trust, I'm assuming maybe she means that the primary one is the beneficiary of the new one? Or the trustee of the
Yeah,
new one?
I would just suggest that she pays for and has the kids, the children, create the trust themselves, and then it's their Yahoo. I mean, it's their Kuleana, so it's their process. But yes, a primary trust would create the secondary trust, and then the primary trust would be the beneficiary of that second trust. But then it gets complicated because then you want your kids to be some of the beneficiaries too. So it could be that the trust just takes a percentage and the children get a percentage as beneficial interest.
Does it get to be like a chess game sometimes, arranging all these things?
Yes. It's good that they think about that, but what I want to suggest is that keep the trust separate. In other words, every time there's a trust created, keep it separate from the first one or the other ones, and get different trustees. And the more you spread it out, the more safe it is from suit or something to happen.
And asks, are we commingling if we, as a beneficiary of a natural law trust, take out a mortgage for a home, but have the trust pay the down payment and the monthly payments?
No, if the trust is buying a house for you and you're going to be the caretaker, then that wouldn't be commingling because the trust is going to own the house.
So commingling means the trust directly purchasing individual personal items for the individual.
That's typically it's like using your trust credit card to take yourself to lunch, and it's not really about the trust. So that would be a little commingling, or to buy a present for somebody that doesn't have anything to do with the trust, or it's just make sure you try to always use money that's in the trust for things that belong in the trust.
Right. Gene asked a similar question. If you have a business trust, can you use it to pay debts such as homes and vehicles?
Yeah, of course. The trust, even though you're defining it as a business trust, I say private irrevocable trust can be used for business purposes or personal business as well. I mean, anything that you can do as an individual, the trust can do as well.
Right. Do you think we've already answered this? James asks, give examples of commingling funds. Have we addressed that sufficiently?
I think so.
All right.
Yes, don't use trust funds to buy personal items.
All right. James also asks, if a natural law trust is given a 1099 or other tax document, how does it deal with it?
I just put it in a drawer and forget about it.
Mm-hmm.
But that's just me. So not for public consumption. And you're going to have to deal. Uh, I would have you, all the clients specifically call me to tell me that they've got something going on with IRS or 1099s or anything, and I'll either defer them to you or we'll figure out a way to solve it altogether.
Meaning that it is an absolute truth from the experience of everyone that the IRS sees these at all, if they even are willing to recognize them as pass-through entities without their own tax liabilities. So,
Sure.
yeah.
Okay, I think I got to wrap it up.
Yeah. You just hit the nail on the head. You've got the end of the chat questions here.
Good,
And,
good timing.
yeah, good timing. And I'll wrap up and conclude here a bit more. And we'll go into just the last few slides here. So thank you, everyone, for being with us today. We've enjoyed it. We've had a nice group today. Good questions, excellent questions. Randall, thank you. You've been clear and illuminating, as usual. As a
I
reminder,
hope so.
for those who tuned in late, we have today being Wednesday, June 20th, 2018. Tomorrow, everyone, enjoy the summer solstice if you're in the northern hemisphere. Winter solstice if you're in the southern, the solstice in any case. And our next webinar is scheduled for Wednesday, August 1st, 2018 at 4 p.m. Pacific time. Watch the Brilliance in Commerce newsletters for that. And so thank you. Have a very, very illuminating end of your day.
Thank you, everybody. It's been a pleasure to give what I have.
Did I say, no, that we're not doing anything in July?
No, well, I'll see you in August 1st.
Yeah, August 1st. We're skipping the entire month of July. And blessings to your family, Randall. Thank you for all of the time you've been giving to this and to your dedication to helping all the clients. We've continued to have only positive feedback on how you take care of people. And on behalf of everyone at Brilliance in Commerce, we wish to thank you for it.
Aloha, everyone.
Aloha.